Alrighty, well, hello there, everyone. It's Mazske Finance coming to you again with what's going to be another outstanding interview. And today is Thursday, January the 6th. And today I will be interviewing Bill. So, Bill, go ahead and say hi to everyone.
Hey, everyone. Nice to be on the channel. Thanks, Mazske, for having me. I appreciate it.
All right, certainly. I appreciate you being here. So, I guess just to start off with, Bill, if you just want to kind of tell us a little bit about yourself, where you came from, and who you are.
Okay, so I'm originally from Western New York, grew up there, went to school, through high school, all that. After high school, went to college for 2 years and then decided to join the military. So I enlisted back in 2005. I went through a enlisted officer commissioning program in 2010, graduated from college in 2013, and I've been commissioned in the U.S. Navy ever since. Spent time all over the place. Most of my tours have had me in the Hampton Roads, Virginia area, but I've been to Italy. I'm now in Pearl Harbor, Florida, California, a little bit, all over the place.
So that sounds pretty good. And let me think now, if you care to share, like, are you married or do you have a family or?
Yep, married, 37 years old, 3 kids, all school-age kids who are enjoying life right now, along for the ride.
Sounds good to me. And I'm just curious, then, out of all the places you've been so far, what would you say is your favorite spot?
Well, that's a tough one. Probably Italy. We loved it out there. I was there for just about 2.5 years. Pre-COVID, we got to travel all over the place. I went somewhere in the neighborhood of 14 or 15 different countries. I lost track and I got to look it up every time. And that was all in 2019. And then even during COVID, it's beautiful out there. The wine is great. The food is great. So we did okay.
Sounds good. What part of Italy were you in?
I was stationed in Naples, but we traveled all over the country. Spent a lot of time in Rome, a lot of time in northern Italy, in the Dolomites, near Venice, Milan, places like that.
Okay. The reason I ask, I have an older brother that was in the Army, and his first tour of duty, I believe, was a 2-year tour. I think it was in Sicily, I believe.
Yep, there's some bases down there.
All right. All right. Sounds good. All right. Well, let me ask you this then. How did you first become interested in investing?
I guess it kind of started subconsciously when I was younger. My dad's been investing in stocks, mutual funds, since I can remember, my earliest memories. And he didn't really, he introduced me to savings back then, which is like save your money and it earns interest, but didn't really get me into stocks and mutual funds. I would say that curiosity was kind of just planted there early. And then I started researching it a little more after I enlisted, and I actually had some income that I was able to do something with. So I started the Navy's version of retirement, or the government's version of the retirement account, the TSP, back in 2005 when I joined. And I've been contributing to that for the last almost 17 years now. And then probably 2006, I think, is when I started my first non-retirement investing, and I started putting money into mutual funds through USAA. They no longer do mutual funds. They were sold off, but that was my first kind of foray into investing. And that's really all I did for probably my first 10 years in the service. I didn't get serious about it until 2016 or 2017.
Okay. So around that time period, 2016, 2017, when you got serious about it, was that just due to, you think, the age you were at, or did you maybe make contacts or talk to you about different kind of investments, or what did it really lead to when you got serious about it?
Well, I think the driver behind it was getting married, having a family. I had one kid with another on the way at that point. I had already started a very small 529 plan for my daughter just before that. And then we were working on paying off our house. I bought a house back in 2013. And I didn't really know anything about buying houses at that time. I completely relied on my real estate agent. And then she gave me the advice, hey, if you have extra money, just make extra principal payments. So I guess you could argue that that was one form of investing that I was doing back between 2013, 2018, when we had the house, was making double mortgage payments every month with the second payment going completely to principal.
Okay. So where was that house at?
That house was in Hampton Roads, Virginia, where I was stationed at the time.
Okay. And you said 2013 to 2018. So you have now sold that house?
Yes, I sold that house. So I got orders to go to Naples. We got orders to go to Naples in 2018. Sold the house late 2018, I think November. and then just pocketed all the equity from it and took it out to Italy with us.
Okay, that sounds good. So let's see here then, and correct me if I'm wrong, but you are now also a real estate investor, right?
That's correct. Yeah. After, I would say probably close to 18 months of prodding and, hey, you should look at this and give this a shot. Your previous person who you had on for the interview, Caleb, good friend of mine, gave me the tools and introduced me to the investment group that we're both in, which kind of sent me from the research phase to taking the leap to actually buying my first rental property. So that was early 2021. Yeah, March is when I put my first offer down.
So March of 2021, that's when you bought your first rental property?
That's when I went under contract on my first one. My closing date was actually early May. So May 5th, I think, is when I got my first. And it was actually two. It was a package deal. They were two houses that were next door to each other. So I bought my first two houses in Northwest Indiana early May.
Okay, it's interesting because you know what I was doing in, say, March of 2021, and by May of 2021, I was settled in. But in March, I bought this house I'm in now in Southwest Florida.
Beautiful place, yeah.
It is. So you said you bought two houses side by side. Were they from the same seller, or tell us a little bit about that?
Same seller, same listing agent. That was all kind of transparent to me. The agent we worked through completely handles everything. All I did was say, hey, I want these two houses, put in the offer through her. And then it was all history from there. But yeah, I kind of got, I wouldn't call it lucky, but it just seemed like a easier foray to get in and actually dive in rather than just buying one house and waiting and see what happens. So I got lucky to find both of those on the MLS, put an offer in, and it was accepted.
Sounds good. So that was just in, say you closed in May of 2021 on two houses. Where are you at right now?
So in November, I picked up my 7th rental property. So I picked up another 4 in August. The first one was just another house off the MLS. Just a regular house off the MLS, single one. And then there was a package of 3 that I got, which was actually probably the longest deal. Not probably, it was the longest deal that ended up happening. There was a huge package deal that a seller up there was trying to sell 8 houses on, and couldn't really come to terms with one person or a group of people on all 8. So between Caleb and I, we split a few of the houses. I picked up 3 of them, and I think he picked up 2. And those closed for me on August 30, that package of 3. And then picked up my most recent one in November, and that's where I stand right now at a total of 7, all single family homes.
Okay, sounds good. And are you getting mortgages with all of these properties?
Yeah, they're all 30-year financed. I think they're all exactly 4.5% interest rate. I've bought some points on some of them, which some people may not want to pay the extra closing costs up front. I've never paid over $1,000 to buy points, but over the long run, at 4.5% interest in 30 years, it's going to save you way more than $1,000 interest charges.
Right, very true, very true. And have you used the same bank with all of these mortgages, or have you used different ones?
I haven't. The first 2 I did with Prime Lending, which is a company that I know you're familiar with, a company that Caleb uses also. Awesome people. And then when I was looking for my 3rd house, before I picked up my actual 3rd house, I had put an offer in on a different house, which ended up being a complete disaster. The inspection report was terrible on it. But the person who was selling the house had a preferred lender who I got linked up with, who also seemed pretty solid. So I ended up using them for the 3rd house, but went back to Prime Lending because of all the headaches I had with that second lender, and I will never use them again.
Oh, okay. So you are still with Prime Lending then?
Yeah, all of my most recent 4 houses have been financed through Prime Lending.
Okay. And you may have seen, or you might not have seen it yet, earlier today, I interviewed Jerry Padilla with Prime Lending.
Perfect, yeah. Jerry's awesome.
He
Jerry
is
and
awesome.
Melissa, great people.
Yeah, and Melissa didn't make an appearance on the in the video, but prior to the video starting recording, she did stick her head in the frame, and we said hello. So I got to see her just like I'm seeing you.
Yeah, Melissa's actually from my hometown, so we hit it off immediately when I made my first call to Prime Lending and realized I was dialing my old area code to her cell phone number, and I said, "Hey, do you live in Rochester?" And she said, "Yeah, she's been there for a long time." I think we grew up about 20 minutes apart from each other.
Okay. Well, as you know, it is a small world.
It is. Yeah. Tell me about it.
All right. Well, good, good. So you're up to 7 rental properties, and I'll have a follow-up question to that. But before we get there, you also have an investment in crypto, correct?
Yeah, I have a lot of investments. I'll just run through my list real quick,
Sure.
real surface level, just kind of what I have. My two biggest holdings are real estate equity right now. And then I have an investment account through Charles Schwab, which has a significant stock and ETF portfolio in it. We can get into that a little bit more later on if you want. And then my retirement account through TSP, and then some smaller stuff where most of my money is just kind of, not most of my money, but the rest of my money is kind of sprinkled around. I have my kids' 529 plans. I have a Wealthfront account, which I've been investing in for, I think, just about 5 years now. I use Fundrise, which is a real estate electronic syndication program. And then, yes, I have some crypto also. I first bought crypto, I think, back in 2019, very small amount, didn't really know anything about it. Still feel sometimes like I don't know anything about it just with the advances in it. But I increased my position starting in early 2021 in crypto.
So, all right, that sounds pretty good. I mean, you're very well diversified, which is
I try to
good.
be, yes.
Yep, and I'm kind of the same way. Well, tell me a little bit about Fundrise, because I've never really talked about Fundrise on my channel, and I haven't used it as an investment yet. So, for those out there that know nothing about Fundrise, just kind of talk about the basics to it.
Okay, so Fundrise is what they call an electronic real estate income trust. Normal real estate income trusts are just stocks that are sold on the New York Stock Exchange, NASDAQ, Dow Jones. They're all over the place. But basically, it's a company that owns a bunch of real estate. It's usually commercial, but it can be residential. And you buy shares in that company, and that company pays you dividends, cash dividends on the shares that you own based on how much money their properties are making. And then the share price fluctuates depending on, the market, people selling and buying and selling it. That's normal REITs. With Fundrise, the price increases based on their overall portfolio's value and the appreciation on their assets. So you realize both the appreciation through Fundrise and then also get paid those quarterly dividends.
So, all right, that sounds good. It's interesting. It's something that maybe at some point I may make a small investment in it myself. So,
yeah, it's very easy to do. The minimums are super low, and then you can set up just a monthly auto draft from your bank account to go in there. That's what I do every month. I put $250 a month into Fundrise. I do the same thing with Wealthfront, and it's all just kind of happening in the background, and it's fun to watch everything appreciate it and go up along with the time.
All right, well, sounds good. Well, let me ask you this then. In this day and age we're living in, when I see stuff on the internet about finances, or I talk to young people about financial stuff, they're always talking about crypto. As I've referenced before, when I first came to Florida, I was door dashing, and I'd meet young people and I'd say, "Hey, do you invest?" And they say, "Oh yeah, I bought some Dogecoin, or I bought this coin, or I bought this." And I'd say, "Well, tell me about it." And they're like, "I can't." They didn't know anything. Right. So what do you think about that? Do you see crypto as a good investment for all the young folks out there, or is it a better investment for them?
I would say to a point, yes. The advice I give everybody on crypto, whether they're long-term holders or people who are just thinking about putting their first penny into it, is just like just about everything else I have, make it a very small percentage of your investment. I wouldn't recommend to anybody to put more than 5% of their invested money into one specific asset, unless it's something that holds a bunch of assets. So one of the big ones I like to use is the Vanguard Total Stock Market Index ETF, but that holds 4,000 companies. So you're not really investing in one thing. Whereas with crypto, you're buying one token. And if you put too much money in that one token, and anybody can look up historical prices, but crypto is probably the most volatile asset, if you want to call it that. I don't even know if it's really an asset, but the most volatile market in the world. There's nothing that changes prices more crazy. And sure, you could reap some great gains on that, but you could also lose a lot. So keeping your investment low in that enough that if it did go to zero, you wouldn't be, distraught or lose your life savings over it. So very small percentage. And my total crypto investment, I think, is roughly 2.5% of my net worth right now. And it probably won't increase much more than that.
Okay. All right. That sounds pretty good, because I think I've shared before on my channel, you were the one that helped me to get started in crypto, which I really appreciate that. So let
Yeah,
me
it's
ask
been a
this.
fun teaching tool.
Well, good. Well, as we kick off 2022, you have 7 rentals, you have a diversified portfolio. Where does Bill see himself going as time goes on? Do you plan to build like a real estate empire, or do you just want to stay diversified like you are?
Yeah, I've got a couple ideas I'm kicking around. I think I will buy some more rental properties, probably in the same area as I already have our other 7 in Northwest Indiana, possibly somewhere else. Who knows? But there's no arguing that real estate is probably the most solid investment you could make over time, especially rental properties, because you're just going to keep getting that income. The home price is going to appreciate when you sell later on, and somebody else is paying your mortgage for you. So other than the down payment, unless you have some kind of crazy expense that you don't plan for, which, as you know, we all do plan for those expenses, you put some money in at the beginning and then you just collect until the end of time or until you sell that investment. So I probably will pick up a handful more rental properties. My soft goal is to get to 10 by the end of 2022. That's only 3 more properties, as you know, but I'm going to be busy roughly 2/3 of the year with work and won't have the same amount of time that I've had before to put into research and going through the closing process. I also plan to continue probably putting a little bit more into those passive vehicles. So Fundrise, Wealthfront, possibly a little bit more into crypto, but only small amounts like we talked about. And then continuing to invest, even though people think there's a big crash coming or that it's an all-time high, continue to invest in the stock market and spreading some money around there as well.
All right, sounds good. Well, if you want to, real quick, as you know, I've been an individual stock investor for many years. I have a very small stock portfolio at the moment because I'm more focused on my real estate and my other alternative investments. But talk a little bit about stock investing, just kind of talk on it a bit.
Okay, so like I talked about earlier, I did mutual funds for a long time before I really knew anything about individual stocks. I bought a few individual stocks here and there, probably about 10 years ago, but a few $100s worth, nothing serious. I didn't really get seriously into stock investing until actually I PCSed out to Italy in 2019. And all of a sudden I didn't have a house payment anymore. I was living on base and I had this extra money that I was like, well, what am I going to do with this now? I'm not just going to throw it into a savings account and get 0.5% or 0.75%. That's nothing. So I started to invest in the market, started pouring a lot of my new money into the stock market in 2019 and 2020. I continued to invest and actually dumped a large sum in after the crash in March 2020. I think I put a pretty big chunk in early April 2020, right after the COVID crash, and then just kept pumping money in after that. Basically, every free penny I had went to the stock market in 2020. And because of the insane gains that I realized throughout the rest of that year, a lot of my rental property down payments were financed basically by my stock gains. So I would sell a portion anytime I needed to put a down payment down for a rental property. And a lot of the times, most, if not all of it was all gains from the previous year and a half.
Okay. Yeah, that's pretty good. That's interesting because my way of looking at that is you have basically bought properties, houses with money that was just created from stock investing.
Exactly.
So it came from Bill's paycheck, but it more so came from the growth in the stocks that you had bought, which now is invested into that real estate.
Exactly. And I haven't put a lot of new money into I still invest a little bit, but most of my money has been either saving up for these alternative investments like Wealthfront, Fundrise, things like that. But a lot of my new money has not gone into the stock market. I still do a little bit, but nothing like I was doing back in 2019, 2020. But the level that my investment account is at, the amount it's at is at or slightly higher than it was before I started investing in real estate. So I look at it as that money has remained basically constant, but I've picked up 7 rental properties because of it.
Yeah, that's really cool then. All right, well, let me ask this then. In the Navy, you're a supervisor, you're a leader, right? You're an officer now. So if you had a young person, let's say they're a E3, maybe an E4, and they come to you one day like, sir, I've heard that you have a diversified portfolio of a lot of different investments. I've saved up $15,000. What do you recommend I do with this $15,000? What advice do you think you would give them?
Yeah, that's a great question because I've thought about this a lot and I have done some of this stuff before. I love educating people financially, especially like you said, junior sailors or junior enlisted people who either work for me at the same command as me, go to the same school as me, whatever. I love teaching these people about this stuff and showing them that if I can do it, anybody can do it. Like it is not hard. It just takes dedication and, having that, what they call those diamond hands during tough times and not making any rash decisions. So if a sailor of mine had $15,000, I'd probably tell them to keep $5,000 in reserves just to have some cash on the side for emergencies, things like that. I think if you don't have a significant portfolio, you should always keep cash on the side just in case of emergencies. I personally don't have what I would call an emergency fund anymore, just because I get paid well enough and I have enough assets investments that I can use should some crazy emergency come up. So I don't keep a whole lot of cash on the sidelines, just stuff to take care of rental property stuff. So I would tell them to put $5,000 away in an emergency fund. I would probably tell them to put another $5,000 into the stock market, not all at once. I would probably tell them, and I have done this with people, I'd say take $1,000 a week or $1,000 every 2 weeks, wherever makes you feel comfortable, and dollar cost average your way into the market. Some people don't like dollar cost averaging because they think you're missing out on those gains that you could have if you put it all in at once. I just like it because it gives me peace of mind, and I know that I'm not putting too much in at one time and then having to worry about, what's happening with all that money immediately afterwards. So $5,000 there. And then I would probably tell them to put $5,000 into either Fundrise or some other real estate syndication, just to kind of dip their toes in. I wouldn't say like, go buy a rental property right now. I think you should research that and put a lot of time into figuring out where you want to buy, how you're going to do it, and really building a team to help you with that before you just dive in, which is what I did. But yeah, $5,000 in a real estate syndication, just to kind of see what it's like, reap some cash dividends, watch appreciation happen, and then maybe that could be a foray into buying investment properties.
All right, that sounds pretty good. Yeah, if I was that junior sailor right now, because I was never an E3, I was an E1, E2, and then I jumped to E4 because I was an ET, advanced electronics program, so I skipped E3. But if I was an E4 and approached my lieutenant and asked the same question, and you gave me that advice, that could have transformed my life as a young sailor. So
yeah, I didn't get any financial education from supervisors when I was younger. Most of the people in the military think that just investing in TSP is enough, and it's a plan for retirement. But I'm pushing towards early retirement, and I don't want to wait until 62. I'm not going to be working for somebody, 50, 60, 70 hours a week until I'm 62 years old and miss out on all of the best years of your life, which I hope is your 40s, because that's when I'll be retired. So.
All right. That sounds good. Well, one thing, if you watch the interview I did with Jerry, he brings up reserves and how TSPs, Roth IRAs, 401ks, as you get more rental properties and get to your 8th, 9th, and 10th mortgages, you need reserves, and those count towards reserves, which is good. So, and once you get to 10, it may be a little bit till you get to house number 11 or house number 12. But as I'm finding out, there are plenty of options out there of ways to finance above and beyond the conventional ways of financing.
Yeah, creative financing is an endless way of finding out how you can buy property without using a conventional mortgage.
Yes, very true, very true. So, all right, Bill, I think we've covered a lot of different topics here. So I'll try to give you the last word here. Is there anything you want to say? Anything at all? Just go for it. The floor is yours.
Yeah, I would probably the last piece of advice I would give people is just kind of to sum up what I've already talked about, which is start early. And find a mentor, somebody else who's done it before you. Don't try and recreate the wheel. Don't think that you need to find all this stuff out on your own, look up stock investing or pick random stocks. You don't need to do that. Find somebody who's been successful for 10, 15, 20 years or more. Use them as kind of your guiding light or whatever you want to call them. and just do what they've done at the beginning. And then as you watch your portfolio grow, your investments continue to grow, start branching out, looking towards different ways to diversify. Because I strongly believe that spreading your money out in as many places as you can, as long as they're still, earning good returns, is one of the smartest things you can do with your money. You don't want to hold all of one thing and then have some devastation. I sleep a lot better at night knowing that even if the market crashes or something bad happens, like yesterday, right? Everything was down 3%. I don't worry about it too much because I know real estate will hold me up, or vice versa. If my rental properties aren't providing as much income one month as I want them to, stock market's doing fine, and I got money in tons of different places. So slowly spread your money out. This didn't happen overnight with me. It took really 5 years since I started investing seriously, but spread your money around and look at different ways to help your money work for you. And I think that's it.
All right, sounds good. I appreciate this, Bill, and hopefully you and I can do this again.
Yeah,
So
I'd love to do a part two.
All right, sounds good. Thanks so much. And all right, everyone out there, thanks for tuning in to another great interview. And we will have Bill back again in the future. So this be Mazske Finance signing out. Thank you again, Bill.
Yep. Thank you.